Hey everyone, I hope you had a fantastic week. I just wanted to do a trade recap of a couple of the trades I took this week. I also wanted to say if you haven't subscribed to this page, definitely do. There's going to be more concepts coming. This weekend's been big. We just released the new course. I'm quite excited about it. The link will be in the description for anyone interested. But yeah, let's go over some of the price action this week. So we are going to start off with GU. This trade here was based on actually targeting this trendline liquidity. I ended up taking the majority of my trade off once we took this high, as it was counter 4-hour trend, I should say. But I always pay myself at these 15-minute highs. Here we had a breaker block. We had a clean push through it. Anytime there is a clean push like this, and when I say clean push, I mean the candle comes right through. There's no interaction, there's no wicks, there's no price coming in, coming out, then going through it. It just went through it. Means it was all buyers in here. Sellers didn't have a chance. These are often areas that are revisited by the market to rebalance itself. Now, in this area, we did become unconfirmed bullish. Like I said, we were targeting the trendline liquidity here as well as this high as a minor target. The entry is the same as always for me. We come in and we basically tapped a higher time frame POI. So here is my higher time frame POI tap. In that same context, I got a change of character where we swept the lows and we swept the highs. And ultimately, this is the area that did it. Now, if we just zoom in on this and actually look, the change of character came from this exact area right here. So for me, it is this candle here that caused the change of character to complete and the reaction point to fail. Now, if we just look at that in a little more detail, when I say reaction point, to me, this is your last sort of bit of supply. And each supply needs to be taken out, preferably with some sort of a reaction. So we got a reaction point in here. This doji looking thing here actually caused the reaction point and the supply to fail. So ultimately, that becomes my entry candle. I think this was like an 8R. I might have took it with a little little lower stop loss, a little smaller size. And what I did was I took 80 or 90% of the trade off here, and then the rest I actually targeted the trend line liquidity here, which was this, and it needed to go. And to me, this was the unmitigated wick with inducement below it. So that's where the remainder of the trade ended up going. So it ended up being closer to like a 9R by the time it was done. This Friday, let's actually fast forward to yesterday's trade. So yesterday's trade, I actually closed early, and I'll explain that in a second here, as soon as we find it. So we're obviously very, very bearish. We had a flip zone here, so the high makes the last. Is that what it was? No, we had already become bullish. So here was our last sort of structure. This is structured to me because the pullback was big enough. We put in another low. Then we came back up and we actually took this high. So we became unconfirmed bullish. And then we took one more high, which actually confirmed our bullish trend. And I entered in this area. Now, since it was Friday, I was only targeting this. If it was any other day of the week, I would have held till at least a 4-hour supply zone here. Probably partialed out 80-90% there and seeing if the rest went any higher. However, this was Friday. London did just have a time change too. That is not what was supposed to happen. London did have a time change on Friday last weekend as well. So with London being an hour off right now, our kill zone ends an hour sooner. till North America changes their time back over. So at this point here, this should have been like a 7R trade for me. I ended up closing at 20 some pips. It was like a 6R. So I closed somewhere around here. Reason being was it's Friday, and right around this area is where I closed it. I knew that it being Friday and the London volume leaving, as our volume started decreasing, I had no interest in holding this trade. We are bullish. I was pretty sure this was getting run, but to me, a 6R on Friday is a good day. Don't get greedy. Close the trade in full, and there's no reason to get greedy on Friday. It was also NFP Friday, so to be able to sit on my hands and still make 6R in in an hour, it's a great day. Like as I always say, we're paid to wait. I did want to go over one more trade here, and this was Euro on Monday. So let's see, let's go to the 15-minute here. Now, I missed the sell back down. However, I did catch the buy up. So we are in this 15 demand here, and those either in my Telegram, you've seen the full charts, how I took these trades and why. This is just a video in a little more detail of what I was looking at. So we're obviously bearish. What I seen was a disrespect of 15 supply. So if we just look at this in detail, we took the lows, we took the highs right here with this. So what I did was I targeted these highs. To me, they were going to go as they disrespected this supply. There was a beautiful sell down after that targeted this trendline liquidity that would have ran this low. I was busy sitting on the gold chart. I completely missed that. However, I did get a decent return on this trade here. And again, we have the same concept as always here, where we have our last sort of a supply zone, reaction point. What took out the reaction point? And you would say the sell to buy wicks do. And if you actually go into the 30-second and the 15-second, you can actually narrow down to exactly where the reaction point was taken out. And a lot of times when I put these entries in, what I'll do is I'll still cover the whole sell to buy wick, but I'll find exactly where the reaction got taken out on the seconds, and then I can get more accurate with my entry. Because at times you have to take the whole, you're going to cover a little more. Other times I can cover something like this because I know off the seconds that's where the move actually got fueled from. So I just targeted this high. It took a long, painful ass time to hit it, as I had to sit through all of this beautiful stuff. What you can also notice is the range wipe here, where the highs and the lows are getting stacked and wiped. You create a trend line liquidity, more trend line liquidity, and ultimately all we did was create inducement here, which got, so the original inducement got taken here. We swept it, but then we failed to make a new low. So the expectation was to come back, sweep this high, mitigate this supply, and run this low. Like I said, I completely missed this sell. I was busy sitting on gold, and I took this exact same setup on gold. It had just wicked me out and ran to target, so unfortunately that one didn't work out for me. Now, I wanted to just talk about higher time frame intentions a little bit. So with Euro, looking at the daily side of things, what I'm kind of looking at right now is daily is bearish. We did wick below the daily low here. As of right now, we failed to close below theirs. It's only wicks. So I'm assuming something along the lines of some sort of retracement, whether it's up to here or here. And then we're going to run this low, and the daily order flow should continue. Obviously, we'll see what the market brings us. And something I also want to mention is we're also bearish on the weekly time frame on Euro. So I don't expect this retracement to stop anytime soon. I think the next thing to stall this should be somewhere in that area. But obviously, again, we'll see what the market brings us. On GU, we have a similar situation where we are bearish on the daily and the weekly. And the 4-hour finally realigned with the higher time frame. So again, GU, we're bearish. This right now is a week low on GU that actually didn't get taken on Friday. So once this retracement completes to wherever it wants to go, my target is going to be this weekly low at a bare minimum. Whether we make new structure or not is irrelevant. That low needs to go. This low is weak because it failed to take this high, or even this high. It came up, it completely failed, came back down. Now we had another failed reaction. So with what I'm seeing, I expect something like this and then run this weekly low because it's weak. So that's kind of what my analysis is for the next week, what I'll be looking at. Gold, I am very bullish on. And the reason being is if we actually look at how gold formed. So gold did actually close creating a new 4-hour high. And this was actually the last time frame that wasn't aligned with the higher time frame. What I mean by that is, oh, never mind, gold's bearish on daily. My bad. We're obviously looking to take this high before we're bullish on daily, but 4-hour is in line with the weekly. And from what I'm seeing in gold right now is we have a very, very strong point right here that smart money has protected numerous times. This is our weekly low. This is the last weekly low that made the all-time high on gold. And as you can see just on the weekly, the amount of attempts to take this low, and we haven't been able to do it yet. So now we have to formulate an idea that this high here is weak because it failed to run this. You can also start formulating the idea that once this high goes, that maybe this high is weak as well because it ultimately also failed to take this low. Obviously, I need to see a little more momentum. I need to see these highs go. I need to see daily become bullish on gold. But everything I'm seeing on gold, I'm expecting more bullish price action. And I am bullish on gold as long as this area at 1676 or whatever it is. 1676, yeah. As long as that area holds, we are bullish on gold. So that's kind of my forecast for next week, what I'll be looking at. So I hope you all have a good weekend. Again, don't forget to subscribe if you haven't. And I'll see you guys next week.